Welcome to Protocol Watch. Today, we're diving into day 191 for the PLAZM Protocol.
All right, before we get started, just the usual reminder. This is all for educational and entertainment purposes. It is not financial advice, so please always do your own research.
So, to really understand how PLAZM did today, we first have to zoom out and look at the wider market. And the theme today is what I'd call a fearful bounce. The crypto market as a whole staged a pretty big relief rally overnight. Ethereum, it surged an impressive 7.59% to get back over $2,200. Bitcoin also saw a nice climb, posting a solid 4.9% gain to reclaim that $71,000 mark. Now here's what's really fascinating. Despite all that green on the screen, market sentiment is just broken. The Fear and Greed Index is sitting at a mere 17, which is deep in extreme fear. So what does that tell us? Well, it tells us this is a classic bear market bounce, not some big reversal driven by new, confident money pouring in.
Okay, so with that as our backdrop, how did the PLAZM protocol itself respond to all this? Let's zero in on its specific price action. PLAZM is up 5.49% on the day, moving up to about a penny and a half. Meanwhile, its share token, eShare, tracked Ethereum almost perfectly with a 7.29% gain to $7.65. But the crucial comparison for us today is PLAZM versus ETH. With ETH up almost 7.6% and PLAZM up about 5.5%, we're seeing about a 2% performance gap.
So, should we be worried about that gap? On a single-day basis, the answer is no. This little bit of underperformance is totally expected when market fear is this high. New money just isn't rushing in to chase every little green candle. What's happening instead is that the protocol's internal mechanics are doing all the heavy lifting today. And speaking of those mechanics, that brings us to the real headline of the day. Let's take a look at the vault. This, right here, is the standout metric for day 191. The protocol's vault grew by nearly 9 full ETH overnight. It jumped from just over 200 ETH all the way to 209.40. That's a huge move. And this really shows you the real-world impact. At today's prices, that single-day increase represents roughly $20,000 in new capital being locked into the protocol's treasury through bonds. That is just a very, very strong signal of underlying health. This growth brings the total vault value to just under $470,000. We also saw 142 new bonds minted, which is fantastic activity for a market that's still in extreme fear. Now, you might notice the bond APR has adjusted to just under 31%. This isn't a problem, it's just dilution math. As more bonds get created, that daily yield gets spread out across more holders. It's a sign of growth. So where does all this yield and growth actually come from? Let's look under the hood at the protocol's engines and the mechanics behind all this resilience. The daily yield from the treasury is put to work across these 3 core engines. You have the burn engine, which has used over $74,000 to buy PLAZM right off the open market and permanently reduce the supply. The build engine has spent over $28,000 to deepen market liquidity. And the grow engine, well, it automatically compounds yield back into new bonds, growing the treasury without anyone having to lift a finger. And that burn engine has a really powerful long-term effect. As you can see from this chart, a full 18% of all PLAZM ever created has now been permanently destroyed. When you combine that with the 28% that's locked in staking and liquidity pools, the actual freely floating supply is a lot more constrained than you might think. Okay, so the present is looking really solid. Let's turn our attention now to the forward outlook. And the view ahead is exceptionally clean. There are 0 token releases scheduled for today and only a tiny 65 tokens tomorrow, which is nothing. The 80-day scan shows clear skies, meaning there are no major supply cliffs or overhang pressure for the protocol to fight through in the coming weeks. All right, let's bring it all together. What's the final verdict for day 191? Well, today's scorecard is green right across the board. Vault growth was exceptional, the price response was healthy and totally expected, and the forward outlook is crystal clear. All of this points to one really crucial takeaway. The protocol's core health metrics are strong, even in a fearful market. And that brings us to our final thought. The protocol is doing exactly what it was designed to do in a bear market. It just keeps working. The internal engines are firing, the treasury is growing organically, and it's proving its resilience against all this volatility.
And as always, please remember this is all for educational purposes. Past performance is no guarantee of future results, and investing in cryptocurrency involves significant risk. Thanks for joining Protocol Watch.